Have you filled up your car recently? Ouch, right? The prices are just soaring. And you might be wondering, what on earth is going on? Well, it turns out there's this surprisingly direct line from a conflict thousands of miles away straight to your wallet. So today, we're going to trace that line. We'll go from the Middle East right to your car.
Yeah, that quote right there, I think it hits the nail on the head for a lot of us. It really does feel like someone's just thrown a spanner in the works of our budget. And crazy? That's pretty much the perfect word for how inflation is feeling these days. It's this weird sense that something happening way over on the other side of the world is having a very real and very expensive impact right here.
So that's the big question, isn't it? How does a conflict in the Middle East actually connect to your wallet? How does a regional crisis turn into this global headache that makes it cost more every single time you go to the petrol station? Well, it all kicks off in one very specific and incredibly important place.
All right, let's get into it. We're about to meet the main character of our story, if you will, the Strait of Hormuz. You know, you look at it on a map and it might not seem like much, just a skinny little strip of water. But trust me, this place is one of the most critical sea lanes on the entire planet.
And that's what we call a geopolitical choke point. It's basically a narrow channel that's part of a huge global sea route. I mean, the best way to think about it is like a massive bottleneck on a global highway. And the Strait of Hormuz? It's probably the most important one there is. And we're about to see what happens when you squeeze that bottleneck. Spoiler, the whole world feels it.
Okay, get ready for the number that explains everything. 20%. Just let that sink in. 1/5 of all the oil the world uses every single day has to pass through this one tiny corridor. We're talking about the energy that powers our cars, runs our factories, you name it. And all of it depends on safe passage right through here.
But here's what's really wild. It's not just about oil. Look at this. A massive chunk of the world's liquefied natural gas, LNG, also goes through Hormuz. We're talking 20% of the global supply. And then, get this, fertilizer. Almost 1/3 of the world's fertilizer supply squeezes through that same choke point. That has huge knock-on effects for food prices all over the world. This brings us to a really important point to understand. So Iran itself produces maybe 3 to 4% of the world's oil. That's significant, but it's not the whole story. The real power here, the real leverage, comes from its location. It's not about them stopping their own oil, it's about their ability to choke off the flow of oil from all their neighbors. And that, my friends, is a much bigger threat to the global economy.
Okay, so we've established this choke point is massively important. So what happens when it suddenly stops being safe? Well, that's the trigger for the whole crisis we're seeing now. And here's the thing, you don't even need a formal military blockade. Think about it. Shipping companies are businesses, right? They're responsible for these multi-million-dollar ships and, way more importantly, the people on them. So when the risk of getting attacked gets too high, what do? They just stop going there. It's a business decision.
And the effect of that decision? It's immediate and it is drastic. 70%. That's how much the traffic through the strait has reportedly dropped since the conflict started. That is staggering. The world's most important energy highway has basically come to a grinding halt almost overnight. All right, the ships have stopped, so now we get to connect the dots. This is the global ripple effect. How does a shipping jam on one side of the planet send a shockwave that you literally feel in your wallet?
It's like a line of economic dominoes, and the first one has just been tipped over. First, the shipping stops. Bam! That creates an instant supply crunch. Suddenly, 20% of the world's oil is at risk, so the price of crude oil skyrockets. That's driven by actual scarcity, but also a lot of fear in the markets. Next, that higher crude price gets passed on super quickly to the price of petrol at the pump, the stuff you and I buy. And the final domino? Well, everything runs on energy. So when energy costs go up, so do the prices of, well, pretty much everything. And that's inflation.
Here's a pretty good rule of thumb you can use. It's a really direct connection. For every single dollar that the price of a barrel of crude oil goes up, you can expect the price you pay for a gallon of petrol to go up by about 2 to 3 cents. It happens almost in real time.
But the ripple effect goes way beyond just the petrol station. And honestly, this is where it gets kind of wild. We think of oil as fuel, right? But it's also a core ingredient in thousands of products. So yeah, of course your airfare goes up because of jet fuel. But get this, higher oil prices can also mean more expensive garbage bags, lipstick, seriously. And it doesn't stop there. If inflation stays high because of this, central banks might step in and raise interest rates. And that means your mortgage, your car loan, everything gets more expensive.
So all of this brings us to the million-dollar question. What happens next?
The truth is, nobody knows for sure. It's super uncertain, and the future really hangs on a couple of key things.
And the single most important factor here is time. How long does this last? Look, a disruption for a few days, maybe a week, the world can probably handle that. But if this drags on for weeks or months, that's when the shortages really start to bite, and the economic pain gets a whole lot worse. Now, we do have a tiny bit of a buffer. There's about 90 million barrels of oil that are just floating around the world on tankers right now. It's like a floating inventory. But here's the problem. The world burns through almost 100 million barrels of oil every single day. So that buffer, it's not going to last long. It's a Band-Aid, not a long-term solution. And just to give you an idea of the stakes we're playing with, some analysts are already saying that if this keeps up, we could see crude oil hit $150 a barrel. A price that high would be a massive shock to the global economy and would almost certainly trigger a major slowdown.
And that really leaves us with this final big question to think about. I mean, our global supply chains were just stretched to the breaking point a couple of years ago. This crisis in the Strait of Hormuz is yet another massive shot to a system that's still pretty fragile. It's just a stark reminder of how interconnected and maybe how vulnerable our global economy really is.